What if I told you that after years of economic warfare, two of the world's most powerful nations, the United States and China, have just hit the pause button on their brutal trade war? Not an end, not a handshake of lasting peace, but a tense ceasefire. For years, these two giants have been locked in a relentless tit-for-tat, slapping tariffs on each other's goods, flexing their muscles, and threatening the very foundation of global trade. But today, there's been a surprising twist. In a move that caught many analysts off guard, Washington and Beijing have agreed to dramatically cut back the punishing tariffs they've imposed on one another. After a weekend of intense negotiations in Switzerland, the two sides have decided to scale down their aggressive trade levies for a limited 90-day period. For a war that's dragged on with no clear resolution in sight, this development feels like a sudden de-escalation. But is it truly a breakthrough or just a temporary truce? Let's rewind for a moment. Until recently, the U.S. had imposed a sweeping 145% blanket tariff on all Chinese imports. On top of that, specific goods faced even steeper levies, effectively choking off the flow of Chinese products into American markets. Beijing responded in kind, retaliating with tariffs that raised the cost of American imports into China by 125%. Trade between the two superpowers had slowed to a crawl, with container ships arriving at ports like Los Angeles and Seattle barely half full, if at all. The global economy was starting to feel the squeeze. But now, after these marathon talks in Geneva, both nations have agreed to lower their tariffs by a staggering 115% for 90 days. It's not the complete removal of barriers, but it signals a recognition from both sides that this trade war has reached a dangerous tipping point. Scott Bessent, the U.S. Treasury Secretary, summed up the situation succinctly. He admitted that neither side wants a full economic decoupling. The high tariffs had, in effect, become a quasi-embargo, crippling trade flows and threatening economic stability. Both Washington and Beijing saw the writing on the wall. Continuing down this path would have been mutually destructive. From the Chinese perspective, the tone has notably softened. For months, China's Ministry of Foreign Affairs had taken a defiant stance, vowing to fight this trade war to the bitter end. But behind closed doors, concerns were mounting. China's once booming economy has been losing steam. Growth rates have slowed to levels not seen in decades. Youth unemployment is alarmingly high. The property sector is in crisis, and consumer spending is stagnating. In such a climate, a prolonged trade war with the U.S. could have devastating consequences. Despite their public bravado, Chinese officials recognize the urgent need to prevent further economic damage. The optics are clear. Both sides want to appear tough, but pragmatism has taken over, at least for now. However, this 90-day pause is not a solution. It's merely a window for further negotiations. Analysts are cautiously optimistic, but remain skeptical about whether a comprehensive deal can be reached. The core issue remains unresolved. The United States believes the trade imbalance with China is unsustainable. China exports roughly 4 times more goods to the U.S. than it imports. Former President Donald Trump, who had reignited this tariff war, has made it clear that addressing this imbalance is non-negotiable. For the moment, though, this reduction in tariffs is a welcome relief not just for the U.S. and China, but for the global economy. Other nations caught in the crossfire of this economic conflict had been forced to navigate a treacherous landscape of fluctuating tariffs and unpredictable policies. Yet, as economics editor Faisal Islam points out, this is not a clean resolution. Even with the cuts, tariffs remain at historically high levels. After the 90-day period, there's a real possibility that they could climb back up, potentially to 30%. This remains well above normal trade levels, signaling that the underlying tensions have not disappeared. The complexity of the tariff landscape further complicates the picture. Layer upon layer of tariffs, sector-specific levies, and retaliatory measures have created a web that's difficult to untangle. While broad tariffs on goods like steel, aluminum, and machinery have been addressed, others remain untouched. Sensitive sectors like semiconductors and pharmaceuticals are still caught in the crosshairs. Moreover, additional tariffs on car imports, though less impactful given the small volume of U.S. China auto trade, remain a point of contention. Perhaps most telling is how this truce has been received domestically within China. Ordinary Chinese citizens and business owners are approaching this development with cautious optimism. For many, the primary concern is stability. One business owner, whose company relies heavily on U.S. exports, bluntly stated that tariff reductions are less important than long-term predictability. The constant volatility has pushed many Chinese companies to seek alternative markets, diversifying their export strategies to mitigate future risks. This sentiment reveals a broader shift in China's economic strategy. The trade war has accelerated efforts to reduce reliance on the American market. Even if today's agreement holds, the trust between these two economic titans has been fundamentally shaken. The reality is this: while today's deal is a step toward de-escalation, it does little to address the root causes of the conflict. Issues such as China's industrial subsidies, its exchange rate policies, and concerns over intellectual property theft remain unresolved. These are not minor disagreements that can be patched up over a weekend of talks. They are deep-seated economic and geopolitical challenges that will require much more than a 90-day tariff reduction to fix. In the grand scheme of things, this agreement represents a tactical retreat from the brink, not a strategic partnership. Both sides needed breathing room. For the U.S., domestic political pressures and market instability demanded a recalibration. For China, economic vulnerabilities necessitated a softer approach. But make no mistake, this is not the end of the trade war. It's merely a pause in the battle. As the world watches, the next 90 days will be critical. Negotiators will face the monumental task of bridging the gap between two competing visions of global trade. Can they find common ground? Or is this just a fleeting moment of calm before the storm resumes? One thing is certain: the economic chessboard has shifted, but the game is far from over.